Hey guys, it's Rudy for Best Your Investor again, Mr. Oxy. But not every day is Oxy Day because today is also GE Day. It's General Electric Day while I have my espresso. Um, it was an interesting day because yesterday General Electric went down about, I think it was 5.5% or something like that. And today it went down like another about 8% or something like that. Completely ridiculous. And one of the reasons why is because of the big deal that they've just done. Another reason why is because their forward guidance was a little bit weaker than they had previously shared. But the main reason why is because of the analyst Schmanalyst. So that's what I'm going to focus on just for a second. Yeah, I just want to show you this article from Market Watch. Let me just get this thing and show you what it looked like. So let me see how we can view this one over here. We've got full screen maybe. Boom. Got to make it a little bit bigger. Use two fingers for that because that's how I roll. And I don't know where I am right now on your screen, but I'll just make sure I'm up here on the little corner so that I don't get in the way of the actual footage. So let's see what's going on here. This is General Electric. So first thing is GE is suffering the biggest drop in nearly a year as Analyst Day disappoints investors with big expectations. Tommy Gilmore writes for Market Watch. He says, Deutsche Bank analyst sees investor positioning as a reason for GE's stock weakness. Oppenheimer analyst downgrades on valuation concerns. You see these little ticker symbols up here on the side? This is AER is AirCap from Ireland, and GE, of course, is General Electric. So we see AirCap is up 8% at the same time that General Electric is down 7.5%. Man, this is so interesting how they manipulate the market. So let's see what's going on. Shares of GE took another dive on Thursday. That's today, by the way, March the 11th, putting them on track to suffer the biggest decline in more than 11 months. As the Schmanalyst gave a mixed review of the industrial conglomerate's Analyst Day and the GECAS deal. GE dropped 8.8% in the afternoon trading. Let me just take a sip, otherwise I won't get through this article. What the heck, I'll just down it. Lavazza, it's good for you. Dropped 8.8% in afternoon trading, which would be the biggest one day since biggest one day. That's what espresso does. Since they fell 11.3% on April 1, after it slumped 5.4% on Wednesday, it was yesterday, in the wake of the deal announcement and the Analyst event. Since the stock closed at a near 3-year high of $13.60 on March 8, it has now tumbled nearly 15% in this 3-day losing streak. I might just buy some more. So what happened? The stock's extended sell-off comes after GE announced a $30 billion deal to combine its aircraft leasing business, GECAS, with AirCap Holdings, and surprisingly proposed a 1-for-8 reverse stock split, which means every share will be about $100 or so, and you'll get 1 for every 8 that you currently hold. I have a few thousand GE shares, so I'm going to end up with a few hundred at about $100 or so. Anyway, the company also said what remained of its GE Capital business after the GECAS, the CAS, by the way, is the aviation, GE Capital aviation business that they sold off. What remains will be incorporated into GE Industrial and provided updated financial guidance at its Schmanalyst Day event. Deutsche Bank analyst Nicole DeBlaise raised her stock price target from $14 to $14 from $13 amid an improved outlook for free cash flow in 2022 and 2023. To match the management guidance, she reiterated the hold rating she's had on the stock for at least the past 2 years, citing the lack of upside to her price target. So her price target is $14. GE is currently trading at about 13. Although DeBlaise did not find many surprises in GE's outlook this year, she believes positioning expectations were a major component of the stock's subsequent trading action. GE consensus long amongst hedge funds for several months now and remains a favored way to gain exposure to reopening trade, given the importance of the aviation business. De Blaze wrote in a note to her clients. After a quarterly record 73.4% surge in fourth quarter, De Blaze said the stock had been the top performer amongst its peer group this year. Sorry, I know that for a fact too because I'm long GE. I'm up quite a big chunk, and now that it's dropped 15%, I might just buy some more. Other than the valuation, she heard some other not so positive feedback, including questions over the timing of the GC. Listen, man, the timing of the deal is irrelevant. The value of the deal is very, very relevant. GE just raised $30 billion to pay off debt, and that's what it's going to be used for. That's what management said. Anything else the analyst, Schmanalyst says is just a whole lot of garbage. Oppenheimer, where am I? Oppenheimer analyst Christopher Glynn said the deal and guidance puts GE on a solid foundation as it improves capital efficiency and comes amid expectations that a solid recovery is underway in aviation. Good job, Christopher. Good job, Nicole. But Glynn also expressed concerns over the valuation as he cut GE's rating to perform after being at outperform since November while removing his price target. He said his downgrade was based on valuation given the stock had surpassed his previous price target of $13. Glenn wrote that some substantial turnaround execution and cyclical recovery is already priced in at the current levels, but said the extended duration of the debt structure and strong liquidity now afford GE a backdrop to emerge from the aviation downturn in a position of resilience. However, here's where the circus arrives. Longtime bear skeptic Stephen Tusa at JP Morgan, look at this genius, he should learn to code. Reiterated the neutral rating he's had on GE for the past year. That's okay, neutral's fine. But here, he says, it still sees material downside, which might be true or not, for the stock, as per his $5 price target, which is 59% below current levels. Man, if you had trusted Stephen Tusa with this investment, you would have lost your shirt. This guy sucks. He's absolutely horrible. He says, while he agrees that a simplified GE following the GCAS deal is a positive, he said the deal and the financial outlook has just crystallized for him the real bear case for the stock. With GCAS no longer in the picture, Tusa says there are no longer GE capital assets around Wall Street bulls to argue that there is enough value equities to support related debt. Bottom line, with the free money from the COVID-19 vaccine trade booked, the narrative of GE as a turnaround gaining traction with a V-shape in cash and earnings is running into the numbers that show substantially high leverage well above the targets despite more than $70 billion in actions on top of the fundamentals as we would characterize as mixed with expectations on future earnings that remain too high. UBS's Marcus Mittermeier was a little bit more forgiving, however, as he reiterated the buy rating is at on GE since December, and he set a price target of $15, which implies a 24% gain from current levels. He said that despite the near-term hits to the free cash flow, simplification following the GCAS deal is a clear positive strategically. He said for the very near term, he understands the negative interpretation of some of the elements of the deal and the outlook, such as the hit to the 2021 free cash flow to further reduce the factoring balance, as well as the increase to the net debt from incorporating GE capital into GE's balance sheet. That being said, this has not taken away the overhang from the future factoring unwinds, etc., etc. GE stock has rallied almost 50% over the past 12 months, while the SPDR industrial select sector has advanced about the same, 46.7%, and the S&P 500 index has climbed about the same, 44%. Watch GE spike over the next few days after the analysts, Schmanalyst have all said their piece. And on that happy note, yeah, I'm out of espresso. I should probably go top up again. Otherwise, I won't be able to read all this stuff. But hey, thanks for watching. It's always fun. Look forward to your comments and tell me what you think about GE. Should we buy some or should we get out of it? Let me know. Bye.